book for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 28th day of December 2020. I think my audio levels are off, so I'm going to bump them up a little bit, and that might be too much. So, all right, we'll see how that flies. Anyway, welcome to the show. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, there's a big microphone. Click that. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. The way it works is you'll get an email right before the show starts, and number one, to remind you the show's about to start, and then number two, inside of the email is a link. You click the link, and it automatically joins you to the show. Don't have to type in anything. So, one-click access going forward. Now, on the days you're out of your office, away from your desktop, not to worry. Just point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just don't have access to the chat box. We do stream live on YouTube during these 2 hours, and sometimes we stream live on Facebook and Twitter, but every day we attempt to stream live on YouTube. So with that said, Michael's in the hospital, for those who don't know, and this morning in the live training room, we are having a 3-day open house, and Valerie took the helm this morning, and she trained and guided and taught everything. She did a fantastic job. If you weren't there, you missed out. Good news is she'll be back tomorrow for a repeat performance, and Wednesday and Thursday, and I'm in the background cheering her on. So with that said, now we'll open with a word of prayer. Father, we thank you for all your blessings, for your mercy, and for your grace in our lives. We pray for Michael, for his health. We pray that you would restore him by the power of the Holy Spirit, make him good as new, maybe even better. We also pray for his family. We know that when anyone falls sick or there's illness in a home, it affects the entire family. So we do pray for everyone under his roof. And today, God, we pray as we enter this broadcast that we pray that your goodness and your love would be present here among us. You told us that when 2 or more gather in your name, that you're there. We welcome you. We pray that you would bless our meeting with unity, hope, and vision. Lord, as we pray for unity, we ask that you would build in us all a deep respect for one another so that we might work together as one body with you as the head. We also pray, Lord, for hope. We ask that you would come and stir your hope within our hearts, renew our faith, and we also pray for vision. May your vision fill our lives as we seek to reveal your love to the rest of the world, to the four corners of the universe. And it's in Jesus' name we pray. Amen. All right, happy Monday. I trust that everyone had a good, Merry Christmas. Of course, we know that Christmas is more than ribbons and bows and packages and trees that drop needles all over the floor. It's about something quite serious. It's about eternity. It's about a God who became a man that he might save every man and woman. So do not let this season escape you without taking time to spend with your family. And you, Dad, as the priest of the home, you might just break out Luke as everyone sits around the fireplace or the space heater or whatever you have, and share with your family the true meaning of Christmas. Let me give you the numbers from around the world. These are the cash markets, the indices. Now, historically, the markets rally into Christmas holiday season. Last week, we weren't seeing much of a rally. We were seeing sort of sideways consolidation. But this week, in fact, last night, started off with a bang. We opened for business Sunday night at 6 p.m. Eastern. Now, when people think of the stock market, they think of 9:30 to 4 Eastern type of thing that happens Monday through Friday. But those who've discovered the wonderful world of futures know that the markets open, the Globex markets open Sunday night at 6 p.m. Eastern and remain open around the clock until Friday afternoon at 5 p.m. Eastern. There is a 1-hour pause each day at 5 p.m. Eastern. So Sunday night, last night, that began the Monday session. The Monday session will officially end today at 5 p.m. Eastern. Markets will pause for an hour. They got to sweep the floors, empty the ashtrays. And then at 6 p.m. tonight, 6 p.m. Eastern, that begins the Tuesday session. Even though it's still Monday, that's the start of the Tuesday session. And we'll trade all through the night, through the Asia session, the London session, and then the Wall Street session. And then tomorrow afternoon at 5 p.m. Eastern, that ends the Tuesday session. And then tomorrow night, 6 p.m. Eastern, that begins the Wednesday session. So let me refresh my data and give you the numbers. Again, these are the cash markets, the indices. The Dow's currently up 215 points. NASDAQ is up 98. S&P 500 is up 31. The Russell 2000 is up 5. No movers, no shakers. We define a mover and a shaker as any market that is up or down more than 1%. In the commodity basket, crude oil down 4 cents, trading 48.19 last. Gold down 20 cents, trading 18.83 last. Silver, hi-ho, up 68 cents, trading 26.59 last. Now that's a mover and a shaker. Silver is up 2.5% on the session. Now, when silver moves $1 in price, in other words, when we go from $25 to $26, It's a $1 move in price. That's worth $5,000 per contract, and I'm talking the full-sized silver contract. There is a mini contract. If you're trading the mini contract, it's 1/5 the size of the full-size contract. Margin on the large contract is $15,000. Margin on the mini contract is $3,000. On the large contract, when price moves $1, that's $5,000. When it moves $1 on the small contract, the mini, that's $1,000. Everything. It's the same market. It's the same silver. They just slice and dice it a little bit differently for those who are trading with a smaller account. In the Asian markets, at the close, Nikkei posted a gain of 197 points. Shanghai rose almost a point, and the Hang Seng dropped 71 points. And in the European markets, at the close, FTSE was up 6 points. The DAX was up 203 points. Now that's a gain of 1.5%. The CAC rose 66 points. That's a gain of almost 1.25%. That gives us a mixed day in Asia, a green day in the UK, and so far it is a big green Radio Monday here in the US of A. Now, at this time in the broadcast, we would typically go to Michael and get a recap of everything that happened in the live training room, but Valerie is in the wings waiting, and I do believe Valerie is going to come in right now, and she's going to give us a recap of what transpired in the live training room today. And then I'll come back and we'll go over the Logic 247 alerts. We'll go over the Concierge Trade Alerts, everything that's happened since the markets opened last night at 6 p.m. Eastern. All that and answers to your questions. Valerie, it's all yours.
Okay, great. Thank you. Again, I really appreciate the opportunity to substitute for Michael, and just like in school, it's never the same. But I do take the responsibility I have very seriously, and I think it's a good opportunity for our traders to hear Michael's words back at them from a different perspective and different point of view.
From a different set of lips, right.
Yeah.
It's the same info, but the delivery is completely different. And so things that in the past maybe you didn't quite catch, now you have an opportunity to hear, again, the very same information delivered slightly differently, and that might be the very thing that causes it to click for you, and suddenly the clouds part, and you can see clearly now. Okay, I'll hit mute. It's all yours.
Okay, thank you. But honestly, guys, you know, I am reminded each and every time I do substitute for Michael, just exactly how special what he does is to watch the four markets, get his goal day in and day out, and train us is just amazing. It's just amazing. He's the bomb, you know, as taking that from back in the 90s. So this morning when we started the room up, I guess, you know, a little bit before 9:30, I went through the normal progression of Monday morning, you know, of my morning. We checked the news. We found that Europe and Canada both had bank holidays today, and there's no news in the US until tomorrow. So, you know, we checked the news, and then I showed our traders how to put the weekly trading zones onto their charts using DT Pro. So that took the first few minutes of the morning to get that set up. We had a couple of traders that needed to see it from the very beginning. So I showed how to apply the indicators as well as just how to make changes to the weekly trading zone values. So that's how we started. I'm going to go ahead and start with the ES. So, you know, left to right here on the screen, gold, euro, crude and the ES. There wasn't much going on the ES. During my morning routine, this beautiful trade went off on the ES. Really needed to have a trend line there, but this would have been the goal for the day. Had Michael been there, he would not have done the same thing I did at the beginning. He'd have picked up this trade and got his goal right off the bat. Here is a follow-up trade on the ES, and then we had quite a bit of sideways action. Right here, I ended up putting as you can see right now, the weekly trading zones aren't showing up, but there is a weekly trading zone here at 22.32 to 23. And so by the time we got to this point, I added the rectangle because I blew the chart up, let everybody see, the sideways action, because really what we look for and what our indicators help us find are those easy and obvious opportunities. And so we weren't having that, and the indicators kept us out of it. And we have a bullish cross, a bearish cross, a bullish cross, a bearish cross, a bullish cross. Okay, you get the idea. Bearish cross. All of that, in the span of 15-20 minutes, is just not indicative of a trending market, and our indicators kept us out of that. So the point being that my weekly trading zone lines went away. So I showed our traders that really that's kind of a glitch, I guess, that happened during one of the upgrades at DT Pro, that what we like to use are these rectangles. So when my lines went away, I just made the rectangles so that as the day progressed, whether the lines were there or not, I knew where the weekly trading zone was, because they tend to act as initially here as resistance, and then you'll see that they will act as support. And so we did get into a bit of a trend here and drew the trend line, but there was no trade because here in the slingshot, the angle of the cycle was pointing down too steep to consider a long trade. So there was really nothing going on. It was pretty well untradable in the way that we do the trades in the live training room there on the ES today. And here on the crude, there was a discussion. I was looking at gold and the euro and talking about congruity and uniformity, what we kind of expect as far as markets trading. And we had this up close here on this candle in the crude. A number of our traders got their goal on this particular trade. I did not. But what I came back, and because we didn't really see this opportunity until later, is to me it looks as though the price action as it moved in the direction of a long trade pulled the BBC, which is the green line here on the price chart, up into the bottom of this candle. So really, in hindsight, that's the quandary with using historical charts. You can't tell exactly what happened there in real time. So this entry would have given you an opportunity to get your goal for the day. And if you'd drawn the trend line, and if this was your entry, you still had an opportunity for a profitable trade. Entry would have been at 48.24, and the high went to 35. So you certainly would have had an opportunity in two different scenarios to get your goal on crude from this trade. And as I indicated, a number of our traders did. This was where they got their goal. It was about 10 to 10. Then you can see that we had a lot of just sideways price action, kind of the same vacillating back and forth. Joseph texted me in the in the room that Crude was at a weekly trading zone near there. So understandable price action. In the live training room, we only put the weekly trading zones on the ES. Otherwise, it just keeps us out of too many opportunities. Our goal is to teach our traders how to apply the CFRN Emini method during the 2-hour window that the room is open, and we want to be able to show as many opportunities as possible so that you can learn this rules-based trading, the steps over and over again. You see an opportunity for them to happen. So while we want to preclude some trades, we do want to give an opportunity to practice many times. I did take this short trade here on the Crude. You can see that one of the things in real time, the angle here of the cycle in the slingshot was much more pronounced. And so I had shown our traders how to take, and draw figure about a 45-degree angle using the boxes here in the slingshot. Even though they're rectangles, you try to find half of the rectangle, which makes it a square, and use that to get your angle. And so even though the cycle was going up steeply, it wasn't 45 degrees. So we took that trade to the downside, and I think there were maybe I may have gotten 3 or 4 ticks here, but because as the green line turned down and came down toward the cycle, I was following behind price and was taken out. But you can see where I got 3 ticks profit. There was an opportunity, if the trade had been managed differently by a different trader, that there was opportunity for a goal for the day and then some. This here was an opportunity. This was a break-even sideways price action. And then here, if we had drawn the trend line during the break, you would have had an opportunity here and still be perhaps in this trade. But you can see here the green line is up into the cycle, and when that is happening, we're pulling our stop and we're keeping our stop right below price action, so that we're taken out at a good profit. Because what we expect here after this green line gets into the cycle is for it to pull back and do it all over again. So another opportunity there to get your goal for the day. Early on, because of the European and Canadian holiday, I didn't expect that we would have that much activity in the euro. So Joseph, yeah, thanks. He knows how old I am. He said, at least I didn't say groovy. I said the bomb instead. Pulled that from my kids. And one of the things we had talked about that I had talked about last week was having a preconceived notion when you come in to trade on any given day. And even though I was using the news and what was happening in the broad markets as a gauge, I didn't want to. I don't allow it to give me a preconceived notion on what to expect. But it is something that's in the back of my mind, so that to help me make my assessments. So right here again, this was while I was still talking, there was this opportunity. While I was going over the news and putting the weekly trading zones on and such, I went back and marked this particular trade. Again, here's right off the bat, 932, a euro trade that would have been an opportunity to get the goal for the day. It pulled back, and I did get into this trade and picked up 12 ticks here. 16 ticks in the euro is our goal for the day. It went 16, but as I was managing my trade, it came out and took me out at my stop, which was at 12 ticks profit. You can see that this was a non-opportunity. And then here was a trade that I did not get into. Was chance to get a few ticks of profit. And actually, now that I step back and look at it, that's why this really wasn't a trade. I had marked this, and then when I was explaining it to our traders, after I had done this, it wasn't an opportunity because we really weren't trending. Okay, so here was a low. We pulled back. We put in a lower low, but really, this particular move, this next leg down, was really the trend, and I drew the trend line there. This would have been an opportunity to take this momentum trade for a nice profit, another follow-up trade here. And then since I obviously was looking at other markets, when I came back here, I did get into this opportunity here and picked up another couple ticks. Market turned around, and now we're back into a downtrend. So there was quite a bit of action in the euro, despite the fact that we had the bank holiday. Here on gold, you can see there was quite a bit more going on in gold. There we go. Okay, so right out of the gates, again, while I was doing, my setup, teaching our traders, what my normal routine would look like, there was an opportunity here to get your goal on gold. And actually, I think one of our traders did right off the bat, while I was still showing how to do the weekly trading zones, indicated that they had gotten their goal on gold. This looks like would have been a momentum trade here, where you could have picked up another couple of ticks. But looking down here at the slingshot, it was still still blue and climbing, and still prices on the left-hand side of the MA1 here. So good opportunity. In real time, the cycle was coming down more steeply than it shows here in hindsight. So we did not mark that as an opportunity. Gold went sideways. There was a short trade here. It's setting up, but when you look down here in the slingshot, the cycle was 45 degrees or greater. So there was nothing for us to do there. And here during this movement, again, there was nothing set up by our indicators. I tried to get into this trade, and went to put my price in on the wrong DOM. I'm not used to having having 4 DOMs, and again, that's why Michael says over and over again how he has everything in the same place all the time, because it's really at that point when the market is flowing and moving relatively quickly, you have that muscle memory, and you go to the same place to do the same thing. And another nice opportunity set up by our indicators, and a follow-up trade there, at least a break even, probably a couple of ticks of profit. And then we looked as though we were going to be heading to the downside. I entered on this close on the trend line, and it ended up being a stop out. And then the market did ultimately go down. I missed this and this opportunity. I tried to get this one, and I didn't. Price it moved quickly. I didn't have it on the DOM. I wasn't proactive, and it was a missed opportunity. Another nice trade. Here's another trade with opportunity for profit. This trade would not have been valid because when we look down here in the slingshot, the cycle is going up way too steep. I marked this one to show how the black step line is used to disqualify trades. Dwayne was giving a market overview at this point, and so I wasn't talking. I was just watching the market in the background, and then I went back and showed our traders how to interpret that. And this move right here, this pull back to the BBC on gold with the down close, had a trader get his goal there, but I showed him with this to notice here how the cycle was flattened in the middle. And this is a trade that Michael would have stayed away from because again, the cycle is telling us when it's flattened in the center that there's a lot of indecision and lack of decisiveness. But good for him, good for our trader. It worked in his favor, and that's always the side of the trade that you want to be on. Again, was doing a cycle reset here, so there was nothing. A little bit of an opportunity here, and this was going into 11 o'clock. No trade here. This would have been a momentum trade into the dynamic resistance, and we don't do that. And then we had sideways movement, and then it was kind of unusual to see. Again, there was no higher high put in here, so there were no opportunities during this time. And then we had something happened here. All these candles were formed within within a minute. We hadn't seen that kind of price action. It's usually associated with news, and we didn't really have any news that we could pinpoint for cause there. Nice move to the downside. This candle right here broke the dynamic support. So right here, there would have been an opportunity to draw a trend line, and this down close at 83.3. Let's take a peek at the, yes, would have been a chance to get short. Our traders were at this point sharing we opened some mics. Dwayne opened mics, and our traders were giving Michael well wishes and thanking him for all that he does for us. You can see that was a wonderful opportunity to profit there. And then this is during the break, just kind of sideways range action. Again, our number of visual indicators: bullish cross, bearish cross, bullish cross, bearish cross. Okay, so that tells us to stay away. And then when you see the dynamic support and resistance lines just going across in a straight line, that's also another visual indicator. So all of that built into our indicators helps our traders trade whenever conditions are best for trend trading, which is what we do. And again, my goal over the next couple of days and my focus will be on education and helping our traders see in a little bit slower motion what Michael sees and lightning speed day in and day out. And I appreciate the opportunity. Thank you.
All right, let's have a round of applause. Very good. Valerie, thank you so much. I really appreciate all that you do behind the scenes. Most people never see 90% of what you do for the community, how you make so much of this possible. And let me change my name in this app here so that I can actually launch my screen. There we go.
All right, thank you.
And there we go. So yes, thank you so much. And guys, here's the really good news. Well, two things. One, she'll be back tomorrow for repeat performance. And a couple years ago, she was in your chair. She came up on CFRN, and I'll let her tell her own story at some point, but she found us and she wanted to learn how to trade. And while all people learn at, different speeds, it's an individualized process, personal process, but she went from, wanting to learn how to trade to being able to do exactly what she did today, and that was stand tall in the markets and give us good guidance and direction on where the high probability, low risk opportunities were. Valerie, thank you so very, very much for that. And as she mentioned, we did open the mic during the room this morning. For those who've been around a while, who really know Michael and know how dedicated he is to the job, they took the mic and expressed their thanks and their get well wishes. Anyone that wishes to do the same during this afternoon broadcast, you're welcome to. And if you missed your opportunity this morning, in the final 5-10 minutes of tomorrow morning's room, we'll do the same thing again. So, and you can always post any thoughts or comments or get well wishes in the Telegram discussion group. Now, we use the messaging app called Telegram. Looks like this. It is free, it's fast, it's secure. And you'll notice there's no commercials, no advertisements. We use it for a number of different things. Originally, the purpose was when we introduced our 24/7 Emini alert service, Logic 247, the idea was simply to have a place that people could access from anywhere on planet Earth, geographically, on their phone, on their tablet, on their computer, the alerts as they come out, because with Logic 247, the criteria is whenever opportunity presents itself. So an alert could come out at 2 a.m. or 2 p.m. It's based on whenever opportunity presents itself. Now, the day session here in the U.S., typical Wall Street, 9:30 to 4, okay, when Wall Street closes, the market takes a little breather, and then the Asian market opens, and so you've got traders trading stocks in Asia, the same as they do here in America on Wall Street. And then as Asia starts to wind down, London opens at 3 a.m. Eastern. The futures market follows stocks, not the other way around the clock. So we're chasing the sun from Sunday night at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern. Now, I know some people go, well, gee, I don't want to be up trading at 2 a.m. in the morning. Well, the good news is you don't have to. Once you've installed the Telegram app on your phone, on your tablet, on your PC or Mac, when it's time to go to bed, you can simply turn notifications off in Telegram so that your phone's not making noise all night long, waking you up. When you do wake up and you're ready to start trading again, turn notifications back on, and you'll still see any alerts that came out while you were sleeping. That's important because important prices, important areas are almost always tested. So what that means is once an alert triggers, unless it's just a directional, one direction kind of day, on a typical day, once an alert triggers, there's a higher probability of it triggering again and even again than not. Now let me bring you up to speed on the week so far. Since last night at 6 p.m. Eastern, Sunday night, we've issued 21 alerts. We're in week 126. And last night I posted our 6,000th alert. We've published exactly 6,019 alerts over the last 125 weeks. As I said, we're now in week 126. Okay, and so since last night at 6 p.m. Eastern, 21 alerts. Still waiting on the results of 3. So that has given us 18 actionable alerts so far. 2 of those were stopped out So that's 11% of actionable alerts stopped out. The average over the last 126 weeks is 20% of actionable alerts do get stopped out. So while not a typical number, not unusual to have that low number early on in the week, and then it tends to reach its average as the week progresses. Last week, let me just clarify. When I say 2 stopped out, that's based on not risking more than $300 per contract, per trade, less when possible, using market structure and a simple 3-step methodology that I teach all of our traders. In the live training room environment, we risk 8 ticks on every trade, every market. We want your focus to be on learning the strategy. We want you to be able to focus on learning the setup, understanding when you have a trigger, and how to manage the trade. So we uncomplicate it by just using a fixed 8-tick hard stop on everything. Now that's our mechanical model. Our discretionary model is based upon all the same rules and principles that are used in the mechanical model. In the discretionary model, again, we don't just risk 8 ticks. We have a maximum guideline risk of $300 per contract, per trade, less when possible. Okay, so that's what's reflected here. Sometimes when people are brand new with us, especially if you're on the trial or the open house, you can get confused looking at the alerts and thinking, well, that's more than 8 ticks. Yes, maximum is 300. And I teach that 3-step methodology to everyone who becomes a passport holder. Okay. Now, what is a passport? Well, a passport gives you access to everything we do. The live training room, the indicators, the training. That's group training daily. We do 2 hours of live training every day, Monday through Friday. Take a half-hour break, then we come back and do another 2 hours from 12 to 2 p.m. Some days we finish up a little early, and some days we run as long as 3-4 hours in the afternoon. Depends if we have guests, if we're doing an interview, or if there are lots of questions. But the afternoon broadcast is more about recapping everything that happened in the past 24 hours. Just as Valerie went over all of the twists and turns in the market from this morning. Now, it's important to understand, this is not a woulda, coulda, shoulda thing. Valerie was not showing just a historical chart and hypothetically speaking about, you could have done this, you could have done that. No, this all unfolded live in real time as it was happening. And so what she was doing was recapping what happened, what was discussed, what went on in front of a live audience. The same is true of the alerts. The alerts come out before they trigger, not after the fact. That would be kind of silly. But I've seen a lot of people in this industry do a lot of silly stuff. The alerts come out, and I build into the alerts enough time for you to hear the alert on your phone or your tablet or your PC. Finish what you're doing. Get to your computer, sit down. Get your thinking cap on, get your trading cap on. Look at the chart. Look at the alert. Look at the chart. And when the time is right, if you so choose, then you can pull the trigger. What I don't ever want you to do is to just trade an alert because it's an alert, because that defeats the purpose of what we're doing here. The purpose of what we're doing is not to just give you trades, but to teach you how to find trades. We're teaching you how to find high probability, low risk trade setups. The alerts give you live, real-time examples to work with, so that each day as you add a little bit more to your understanding and knowledge, you have real life examples to apply it to. Now, when you start with us, we do not want you jumping into the market trading live. I don't care how much experience you have in the markets. If you've ended up on our doorstep looking for training, then obviously whatever you've done in the past has not met your expectations. So we want you to start out in the simulator, in the demo account. And we want you to trade in the demo account while you're learning our strategy. Now, how do we know when you've learned the strategy? You know, because we want you to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, our 24/20 blueprint will give you the green light to go live with one contract. Now, the 24/20 blueprint is something we give all of our traders. Helps you write your business plan, your trading plan, and it's designed to help you go from 1 to 20 contracts over a period of 24 months. So there's no get-rich-quick scheme here, okay? This is a job. This is a business, better way to put it. The more you treat it like a business, the more it will behave like a business. If you approach it as gambling, then that's the kind of results you'll get. And we all know that whatever you win in Vegas stays in Vegas, and that's no fun. So we take this very seriously. When you're trading in the demo account, you should every trade you put on in the demo account, you should treat it like you're trading live and like it's your last dime, okay? If you mess around in the demo account, and just shoot from the hip, you're not learning, okay? It's applying everything you learned each day in the room or in this afternoon broadcast. Everything you learn, you're applying it daily to the best of your ability. No one's watching over your shoulder. No one's, making judgments on you as to whether you, getting stopped out or it's you in the market, okay? Well, we don't even have the ability to see what you do in your demo account or your live account, so it's really on the honor system. If you tell us that you got your 10 consecutive days in a row, well, we believe you. We're not going to creep over to your house and peep in the window to see if you're really telling the truth, because if you're not honest with it, the only person you ultimately hurt is yourself. You already know the pain and the agony of blowing up accounts. That's probably how you ended up here. If you want something different, you want different results this time, then you're going to have to do something different. Your approach has to be different. The way you treat it. That's why we start you out in the demo account. There's no danger of you losing any money there. But there is an opportunity to gain an education. The business plan, you write it. And it's not something you do in an afternoon. It's something you do over a couple weeks as you're putting together your 10 days in a row. The business plan and the trading plan. These are two very different documents. One is how you plan to run your business plan. And then the trading plan is how you foresee or plan to make the business plan come to life. It's like if you had opened a sandwich shop. If you bought a Subway franchise, okay, they give you a set of binders that teach you how to run the business, but there's another set of binders that teach you exactly how to make each individual sandwich. How many ounces of mayonnaise go on this particular sandwich, and how many pepperonis go on this particular sandwich, or how many slices of turkey. Okay, that's the difference between a business plan, trading plan. And sadly, 90% of traders have no plan. None. Not a business plan, not a trading plan. They're just looking to get lucky. Now, up on my screen, you'll see that 9 out of 10 new traders fail. Why? Because they don't have a teacher. They're shooting from the hip. Now, there's a difference between somebody selling you some indicators or a PDF or giving you a video or whatever. There's a difference between that and actually having a teacher. Someone you meet with each and every day in the live training room 2 hours of classroom instruction where you're able to ask questions. And then we also provide one-on-one mentoring. All of our traders have access to unlimited one-on-one mentoring sessions. In order to take advantage of that, you simply go to the page on our website, pick a day, pick a time, book a session with me, or if you want to book a session with Michael, you just message him in the morning in the live training room, let him know that you'd like to get together, you'd like to have a session. We'll spend about 45 minutes or less, depending upon. We don't go over 45 minutes because the human brain can only absorb so much at one time. So if you're brand new and you want to meet with me once a week, that's fine. After a while, it'll probably become every other week, and then it'll just be periodically whenever you actually need some help. You have the opportunity to ask questions during the 2 hours in the morning, and you have the opportunity to ask questions during the 2 hours in the afternoon. So that's 20 hours a week of group instruction. Then we do 2 hours every Thursday night. So that's another 2 hours. So a total of 22 hours of group instruction a week. But if somehow there's something that you still haven't been able to catch, grasp, get a hold of, or understand during the 22 hours of group training, then you just book a mentoring session. That's where you and I, or you and Michael, meet up in a go-to meeting environment, the only two people present. We look at the charts, we go through the trades you've taken over the last few days, we dissect them, and help you understand what's going on. If you're having a problem with getting stopped out, there's a reason, okay? Now, when you understand why you were stopped out, it's not nearly as painful. This is a business based on probabilities. If you're still caught up in the hunt for the Holy Grail, trying to find some way, some method to never ever get stopped out again, you're on a very disappointing journey because you're looking for something that doesn't exist. Every professional, consistently profitable trader understands that getting stopped out is as much a part of trading as breathing is a part of life. 90% of traders spend 100% of their time and treasure trying to figure out a way to not get stopped out. Professional traders don't waste their time or their treasure searching for something that doesn't exist. By simply accepting that it's a business based on probabilities and understanding that what you need to succeed is a definable edge, and then you need to calm the voices in your head. You need to exercise patience and discipline so that you can apply your definable edge when the market says the opportunity exists. When I first started trading futures, if I didn't have at least 2 hooks in the water at the same time, I didn't feel like I was alive. I cured myself of that. It usually only takes a couple of blown up accounts to cure yourself of most of the issues. Hang on one second. I heard my phone vibrating across the room. I thought it just might be something important. Mike B. No, the CEO of Santa Fe has not come on the show yet. Possibly this week. And Joseph, you're correct. There's no cherry picking here. We don't cherry pick. We show you everything that happens, the good, the bad, the ugly. In fact, we can't hide it from you because everything we do right in front of you. So you can't hide from that. Now, let's look. We know this is the recap of the logic alerts from last night and this morning. So let's go take a look at the individual alerts so you understand what those are and how they look. Okay. So we're in week 126. Last week, week 125, we issued a total of 60 alerts, which is pretty good considering it was a 4-day week, or 3.5-day week. 60 alerts total, 16 never triggered. We had 44 actionable alerts, of which 7 were stopped out. That's 16%. Again, the average is 20%. Okay, and that's based on not risking more than $300 per contract per trade, less when possible. Week 126, good evening, welcome to Globex. The very first alert coming out of the gate was a gap fill on the S&P. We had a gap open. This alert, the market made, and this was alert number 5,999. The market made $450 per contract traded available on this alert. And then we had a gap fill, that's GF, gap fill on the Dow. B means buy. T is initial target. Most alerts have multiple targets. So this long on the Dow, market made $80 available per contract. Gap fill on the Russell, the market made $1,230 per contract available. Here was a long on gold. Market made $270 per contract available. WTZ's weekly trading zone. Each alert has a final trade to target. If it's a long, if it says buy, that's a long. Got an initial target, and then here's a final trade to target. That's the weekly trading zone overhead on a long. On a short trade, it's the weekly trading zone below. As Valerie explained earlier, the weekly trading zones serve as fixed support and resistance for the entire week. We've published the zones since December 14th of 2009. They go out to our traders every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone. They do not change for the entire week. And price, as I'll show you on the charts here in a moment, it goes from zone to zone, maybe back to the zone, and then it'll move up to the next zone or down to the next zone. It really does help. It's kind of like if you are familiar with football. We got a generation. Now, to the left, you've got the 40, the 30, the 20, the end zone, and to the right, you've got the 40, the 30, the 20, the end zone, right? And the ball is moved from, you've got this idea of, where they stand on each play based on how far they're able to move the ball down the field. And so that's not a great analogy, and I'm not much of a sports guy, but gives you an idea of once you put the zones on your chart, you sort of know where you're at in relation to the overall picture for the week. Okay, so we covered gold. Let's see, the Russell's $1,200 is what the market made available. Gold, the market made $270 available. Silver, market made $525 per contract available. So here, this was buy, long, initial target, potential resistance, second target, potential resistance, third target, potential resistance, fourth target. And here's another long on the S&P, 250 is what the market made available. Here's another long on the S&P, 250 per contract. A long on the Dow, 125. So you have an initial target, a second target, and then the final trade to target. Here's the Russell with 1, 2, 3, 4 targets. The market made $530 per contract available. Long on the NQ. This was a long on crude oil. This was a stop out on gold. That's minus $250 per contract traded. Remember, the maximum we want to risk is 300, less when possible, based on market structure. In this particular, when it triggered, it only required $250 of risk. Still waiting on this one, crude oil. This was a short on gold. Market made $1,200 per contract available. This was a long on the S&P. Stopped out. Now the second trigger ran to the final target. However, we only track the first time an alert triggers. In the beginning, 126 weeks ago, when I was very naive, I thought I could track all the triggers and realized that that was just far too complicated. So the first trigger, whether it runs to the target or runs to the stop loss, that's the one we capture as part of the recap. Okay. Now, Valerie was kind enough to point out that on the second trigger, it did run to the target. Okay, but for the record, we count that as a stop out. There's a long on the Dow. 1 target, 2 target, 3 target, $145 per contract is what the market made available. Long on the Russell, 190. Long on the NQ, 230. Short on the NQ. I don't have the figures on that one. Still waiting, still waiting. So that's everything we've done with Logic 247 since the market opened last night. Okay. And that's last week. Now, when you're on the trial, you have access to all. It's the beginning of Logic 247. We do everything the same way, day after day after day. Now, we have 2 alert services. Okay, these are what's happening in the market right now. But we also offer forward guidance for the entire session. These were our original alerts, the Concierge Trade Alerts. Okay. Now, these don't come out around the clock. This comes out shortly after the Globex open each evening. Last night, I got them out at 6:20 p.m. Eastern. There's 2 numbers for each market that's covered. And these numbers are good for the entire session. As an example, on the S&P, if you see price trending up towards 3703, then that creates a bullish sentiment in your thinking. If you see price dropping to 3669, then you develop a bearish sentiment. When only looking for longs, you want to be already short, or you want forward guidance for the entire Concierge Trade Alerts work hand in hand with the Logic 247 alerts. Now, the forward guidance might say that, okay, we only want to be long and or looking for longs at 3703 and above. But you'll see that there's about 34 points difference between the long side and the short side. So the Logic 247 alerts will quite often give you a high probability, low risk opportunity that walks you right up to this number or right down to this number and beyond. S&P, Dow, Russell, Crude, NQ, gold, and silver. If you want a screenshot, grab them. Okay. Now we're going to go to the charts. As Valerie said, she starts her day looking at the news. Okay. Typically during the day session, we have 2 time periods where we're likely to have ones that have the ability, whether it's a hit or a miss, to move the market. 8:30 a.m. Eastern is a popular time, and then 10 a.m. Eastern is a popular time. If there's any major economic reports coming out, they're going to come out at that time. So you'll want to be aware of when those events take place, not because we trade the news, because we don't. In fact, we avoid trading around economic reports because we don't know if it's going to be positive or negative, and we don't know how the market's going to react to the news whether it's positive or negative. Once upon a time, positive news always sent the market higher, and bad news always sent the market lower. That's not really the case anymore, because so often these numbers are already built into what the market is currently doing because of the 24-hour news cycle, and because we're not locked into trading just the Wall Street hours, 9:30 to 4. We're able to trade round the clock, follow the sun, finding opportunity wherever it exists in whatever market it exists. Okay, so let's pull this down and let's go to the daily chart of the S&P. So after checking news, my recommendation is whatever markets you trade, go look at the daily chart. Figure out what areas are important. Okay. Now, we can see that I've got two different types of fibs on this chart. We're only looking at the last leg up. And the last leg up was defined by the low put in on October 30th. And we now have a new all-time historic high intraday as of today. This was the previous intraday high. And so those fibs were drawn from this low, the Fibonacci retracement low. You can see that on this day right here, December, buyers came in. I won't go into a full-blown discussion. He uncovered some pretty important dynamics, which led him to publishing his thoughts on the golden ratio. Again, you don't have to spend $20,000 on sophisticated software to use Fibonacci. Every trading platform, most folks always revert to the mean, anticipate higher prices until it gets below. And then BC on November 4th, down to the 24% retreat. It literally becomes a self-fulfilling prophecy. So at some point, every trader who uses fibs is going to ask himself, is it really the fibs? Is it really the golden ratio? You know, I don't know, honestly. Now, I know fibs are a real thing. I know that the golden ratio is a real thing. This incredible bounce off of the 24% fib. Is it live? Is it Memorex? Is it the golden ratio at work? Or is it a self-fulfilling prophecy because traders expect it to bounce, so they buy, which causes it to bounce? You know what? I don't know. I just know that when price retraces to a 24% fib, the last thing in the world I want to be is short. Okay? And then buyers came in, pushed it up, and we closed right here, leaving the term. I call it understanding of how price works, how markets work. You can navigate pretty much any market in any time frame. Okay? Our strategy is very simple. I know that, and often when see our simple strategy, they laugh, they scoff. Oh, a bunch of hard stuff, and I still haven't succeeded. Sometimes did you sign up at some place, some room, something, and a week goes by, 2 weeks, okay, at checkout they're trying to upsell you, but if you stick around for a week or two, then there's some new discovery, some new thing you just gotta have. We don't do any of that. We don't like it when our intelligence is insulted. So in turn, we don't ever want to insult your intelligence. Price can only do three things: go up, go down, or go sideways. When the market's going sideways, we leave it alone. When it's going up, we look for buying. Our indicators help us isolate. Now let's talk extensions using the same 14th century math. From the low put in on October 30th to this swing high on November 9th to this retracement low November 20th, we're able to project into the future based on math, not politics, not pandemics, where price is likely to be attracted to, target, or run into trouble, obstacle. So these Fibonacci price extensions are both targets and obstacles. Okay. So we connect this low, this high to this retracement low. This tells us that the first option opens the door. Off we go. We hit that 38% again. The second day we close above it. We close above it. But we can't, and we found we had resistance here that the S&P ever reached. Anytime the market puts in a higher high of only 1 or 2 points, went up just a couple points, took out the previous all-time historic high by 1 point, couldn't go any higher, and collapsed. Okay? This time, we've got, this was a huge red candle, but going into the close, we've got this big bull and stop buying. That could happen. That's not a forecast, but you have to embrace all possibilities. You know, if that happens, then we could see a reversal, which would leave us with just a huge wick and a green body. Now, if price were to trade below where we opened last night, then all this green would go away and it would become a red body with a wick sticking up. But right now, buyers look pretty 50% price extension at 37.52. Our highest weekly trading zone, it's a price extension for entirely different reasons. But those are the kinds of things that we look for when our core strategy methodology, be it our indicators, be it our weekly trading zones, when price extension, the sentiment may shift, it may change. What we've learned since December 4th, there's a high probability that price is going to reverse and make a beeline in the opposite direction, zone or below the lowest zone. But that's only happened a few times over the last decade plus. Okay? So we know we've taken out this high and this high. That's important. That's bullish. Now we have our work cut out for us. We're off the high of the day. Currently we're at 37.2675, and the high of the session is 29.5. So now we're going to drill down to the smaller time frame, the 30-minute chart. In the room, we use an 8-tick. Is simply a chart. Okay. Every candle. Let me just show you an example. I know you already saw it on Valerie's chart. Let me show it here again. Make sure you understand. But this is a 5-minute chart. The big chart in back here, on this chart, you're going to get a new candle every 5 minutes. Doesn't matter what price does. Every range, those candles aren't all the same height, but they are. Each one of these candles. Now this candle has a right now 37.27. So if price goes candle on a range chart, candle is produced a price-based chart. That's what allows Michael and Valerie to make it 8 ticks. Judge you. Okay? This is ask for an open mic, I'll open her. And then the highest weekly zone is at 37.50/51. Still very important. They very well behave as support or resistance. You know, keep that note. So that's 5 points. You start in SIM till you get 10 days in a row where you reach your goal. Only one. You'll reach into your pocket. And taking 2 points a day out of the market net, one contract, then you earn enough money to trade 2 contracts, then you earn enough money to trade 3. The blueprint will always tell you when you've spent enough time trading at a particular level, and it will give you the green light to move up to the next level. If the blueprint says it's time to add contract number 3, but you don't, we use the same methodology. Look at a as it does. So we triggered one, which rallied all the way up to at $50 a point. Remember, price can only go egg. of trying to take out this swing distance here. Now, is it possible that these two... Trading is not even BBC. You only want to look for long trades on your smaller time frame. Put it back below the trigger. Off we go again. Where we run into a weekly trading zone. Spike, leg, retrace. Right here. Not by much, but it did. Now we're for the upside. We go into that consolidation. The market you want to stay out of. I tell you when I can show you. Where'd it go? Second target, $37.38 per contract traded. Hard out. And you're upsell, right? Passport holder would just automatically have entry. Once you go, you watch them come through. Please get your hands dirty. The quicker you do that, the sooner it will all start to make sense. But do not, please do not go live until you've put together 10 consecutive days in a row in the simulator. You're going to shoot in the foot yourself. Okay? You've blown up enough accounts. Let's let that be in the past. Now, I'm not with people one-on-one, and it comes out that they were told to do this and they did that. I don't care how big a mess you may have made of things. Just be honest. We only have 45 minutes each session. It's almost comical, but it's really sad that sometimes I spend 30 minutes of the 45 we have trying to pull the truth out of somebody. Every day. Oh, dude, thank you so much. Help. Number one, if you're getting carried away with your success, my job's to kind of grab you by the pants legs and pull you back down to earth. Go over your trades with you. Analyze. I need you to see what happened. I need you. There will be times about, so why beat yourself up? Roll off your order flow will shift. Mental prowess, crystal balls. It's going to look just like this. There's going to be buyers on the bid, sellers on the ask, with price channeling back and forth. The only difference would be the number of participants or contracts attempting to be bought or sold, and the actual price. See, price is going to just channel back and forth, back and forth. If there's more buying pressure, price will go up. If there's more sell. Well, yeah, but you don't know. This guy with his algorithm, I mean, it costs 10 grand, and so, I can't dispute that. Really? Then why are we having time and treasure? Now, we more of. And he's not spilled the beans on the recipe. And the more sense as time goes on is, with our methodology and strategy, we always know what the next high probability move is. Every market, every time, sellers, and suddenly get the ball, and step one, path of least resistance is to the upside. I just mentioned all the obstacles to the downside. 37.29. Buyers have to eat up all these sell orders to get price back to the high of the day. And then some brave soul has got to be willing to open the door for run up 20 points before it hits major resistance at the highest weekly trading zone. Okay, all that. If you didn't grab a screenshot, I'm going to drag it up one more time. Everything an S&P trader. It's all, I don't want to hear about nothing else. I just want to trade the S&P. Okay. But what happens is over time, as you're sitting there waiting and waiting and waiting and waiting for the S&P to give you that high probability, low risk trade setup, your eyes are going to wander and you're going to see, man, what a great opportunity that was in the day. As you start to understand that we trade every market the same, with the same indicators, with the same underlying principles, strategy, everything the same, you'll realize that, hey, wait a minute, maybe I don't have to sit here all day waiting for the S&P to set up. Maybe I can just scroll through the different markets and see which market is closest to setting up right now. I'll watch it, and if the setup appears, I'll trade it. It's your trading business. You call the shots. You're the boss. You can, if you just want to resist all that temptation and wait for the S&P to set up, you can. There's nothing wrong with that, and nobody's going to judge you for that. But most people over time who really would rather spend their time living life as opposed to staring at charts that way. Just staring at the charts will not make you any money. Learning a strategy that has a definable edge, that will help you earn money. Okay? Focus on the stuff that can help you accomplish your life goals. Maybe you want to build a new building for your church. Maybe you want to build a new church. Maybe you want to plant a church. Maybe you want to build an orphanage. Maybe you want to feed the hungry, clothe the naked. Whatever your biggest, greatest life ambition is, it takes money. Even ministry costs money. The orphanage my wife and I built in Kampala, Uganda, East Africa, it took money. Somebody had to sit down and write checks to make that happen. Now, was it God's will? Yes, it was. Was it incredibly fascinating to watch how God brought it together? Oh, yes. And the fact that he chose the two chief knuckleheads, my wife and I, at that point in our life, to be ground zero for this orphanage that still stands today. In fact, it's flourishing more now than it ever has. 20 years ago, God spoke to us, and we knew we didn't have the money, the knowledge, the education, the connections. We had none of the stuff that a person would figure you need to build an orphanage. But what we did have was God elbowing us, going, I picked you. You go. Not knowing any better, we went. I was 37. My wife and I are a couple years difference in our age, but we were at a point in our life where we were both raised in a Christian home. And then, as was a reason that we were returning, because God had a job for us. God has a job for you. You may already know what it is, and you may already be knee-deep in it. If so, you have figured it out that ministry costs money. Now, sadly, over the years, the way most ministries have been funded is by the preacher, the pastor, the prophet. Don't you? And I'm not a choir boy, you know. I go to the strip club. I don't go to church. I go to the strip clubs. And yet, here's this guy in front of me saying that the Most High King sent him to do this good work, but they need my filthy lucre to make it happen. Does that sound like a story, bedtime story you want to read your kid? Now, my wife and I, before I was in the business of trading, we had a business. A business, we called it a Christian business because we hired people nobody else would hire, people on drugs and alcohol that were trying to get clean, people fresh out of prison, the physically challenged, the chronically homeless. A home for battered women and abused children, a home for men recovering from alcohol and drugs, a mission down in Mexico, in the barrio of Puerto Peñasco. Not because we were smart or clever or trust fund babies. Quite the opposite. We were and we knew tomorrow of what my wife and I were ground zero. But as we sowed into this ministry and we found land and we bought land and we started building buildings, our friends and our family who scoffed at us and really did buy that land. Yep. Wow, now you're actually putting a building? Yeah, classroom. And a month later, a dormitory? Yeah. Began to see God. I pitch in? Can I be a part of that? Absolutely. But if the ministry you're in is struggling financially, you need to go have a talk with God. Okay? Because any good king with whatever they need to complete the task. So I'm not saying you missed God on the mission, but something needs to get corrected so that it becomes of the body of Christ. Everybody. That's when, I'll never forget, when we first started, somebody said, so how many kids you got in that orphanage now? I don't know, at the beginning, I was 10, 20, 50. Oh, don't you know there's 13 million orphans in Africa? That's not even a drop in the bucket. Well, it may not mean a lot in the grand scheme of things, but to the 20 kids who now have a place to lay their head at night, food in their belly, and somebody to tell them that they're loved, naysayers, people will try to discourage you. Don't let them. Just make sure you really heard from God. And as you sow into that ministry, you'll start to see fruit. If you don't see fruit, hit the pause button for a minute. This isn't a sign the enemy's winning. No, it's a sign that you're, focusing in on your relationship with God. Because maybe you're doing exactly what he wanted you to do, but maybe you're not doing it exactly the way he wanted you to do it, or the biblical way of doing it. So check in with him. He loves to talk. I used to think God never wanted to talk to me. But I found out if I shut up for 5 minutes, he had lots to say. Markets, and I'm going to do it right now. Okay, last night, the alert on the Dow. Concierge was to be long 32.10. All right, you get the idea. Buy 32.10. Up at 269, contract traded. High up at 324. So that's over $500 per contract. You see, it holds more often. Retrace. 3350 to 3400. Previous one. Where it all gets below. Somebody asked me to put these dot resistance. Support. Okay, the entry level contract traded, getting in at the entry, published entry, getting out at the exit signal. Now, the chart said you should probably get out here. Lo and behold, we went into $1,000 move with one contract, $700. Now remember, you're going to trade one contract. You're adding a second contract. And then the blueprint's going to have you trade 2 contracts till you've earned enough money to add a 3rd contract. And you just continue to walk up the ladder of success. Okay? All right. So we're getting a second trigger. We already got one. Distance. So our head, we've got gates itself. Okay? S&P, the Dow, the Russell. Now don't waste time in. We've all tried it. Some days it's the Russell, some days it's not. So don't waste time on that. Last night's alert on the crude said we'll waltz right up to the important price, important area. And this really helps to make the case that I have to project into the future in my mind. It's kind of like chess, where you try to stay 1 move ahead or 2 moves ahead in your mind. Okay. Dollars of profit available there. No method, no indicator, no option. A professional trader simply knows how to get stopped out with grace. Now, here's a bit of good news. Once you understand the methodology and the strategy, you don't got to wait for 48.90. That's not like it's some magic number, right? As soon as price gets above the BBC and starts printing green candles, and you take out these previous, by the time you hit this potential resistance, it's $100. Next potential resistance, $200. By the time you got to the trigger, you could be up $500 if you understand the methodology and the shooting yourself. We give you the knowledge, we give you the tools. You bring the most important ingredient to the table, which is patience and self-control, which price has not gotten to yet. However, any of our traders who understand the methodology and the strategy, leg, retracement. The open of this candle was 48.21. At a leg, bearish cross, retracement, boom, boom. It got short 48.20. Expecting support at 48.01. And if support came in, you'd have still had a $200 trade on your hands. But we blew right through the support. There's at 40, the open of this candle, 48.21. You're already down to 47.71. That's $500 per contract traded. That's what the market made available. And you still got quite a ways to go before you get to the actual Concierge Trade Alert short. But see, as you learn our methodology and strategy and learn how to read the indicators, you don't need much thinking alerts. You got eyes. And until that moment happens, that moment of clarity where the clouds part, and you sing, I can see clearly now, we're there to help you. Next on the list is the NQ. There's a big opening candle last night. NQ said to be long 12,765. 12,765. Okay. NQ pays $20 a point. So from 765 to this swing high, that's 20 points, 21 points, but 20 points at $20 a point, that's a $400 per contract move. If you've earned the right to trade 10 contracts, it's a $4,000 move. Now, important prices, important areas are almost always tested. Look what happens here. Come right back to the trigger. Off we go again. This time, we put in a high up at 826. So 65, what's that, about 60 points at $20 a point. This move, $1,200 per contract. And then we dip back below the trigger again. We put in a high at $1,600 for the cart and the horse. Green nonsense. This is the real thing. Treat it like a business. But people treat trading that way. Traders fail. If you'll exercise some patience and some self-discipline and let somebody actually teach you, there's no guarantee you're going to become a consistently profitable trader, but at least you have a bet's chance in that place. There's a 90% chance you're going to fail. You get to choose. It's entirely up to you. All right, two more markets real quick. Gold and silver. Here we go. Opening candle last night, right here. Okay. Now, you see, on the left side of blue and climbing, price starts to walk sideways. Exit signal. Yeah? Okay, the alert said to consider being long 18.99. $18.99. Keep in mind, though, once you understand the strategy, no reason you wouldn't be long right here at 86. But the alert said 99. That's $1,300 from where our strategy says to enter to where the alert says to enter. Because remember, I've got to think ahead, out in time. And I've got to make sure you have time to get to your computer and get your thinking cap on and your trading cap on, right? But that's okay, from 99 up to the swing high. It's $500 per contract traded. 500 bucks per contract traded. Over here, $240 per contract traded. That's what the market made available. On the short side, $18.78. So $18.78. And the swing low, $18.73. $500 per contract traded. $200 per contract traded. And last but not least, silver. Now when you're trading the full-size contract, silver pays $5 grand for every $1 of price movement. If price goes from 25 bucks to 26 bucks, and you're holding a large contract, that's $5 grand. If you're holding the mini contract, that's $1 grand. The alert last night, Concierge, was to be long 26.49. By 26.49. Okay, from 26.49, we put in a swing high. 98. So that's about $2,500 per contract traded. Price gets back below the trigger, but you got red and falling. So on this trigger, you start to get blue and climbing again. And so from 26.49, we make it up to 91. Now it's 40 cents per contract traded. Remember, $1 is $5 grand, or $1 grand depending upon which contract you're trading. Lays asks a question. At 10:10 Eastern, was that a short for Doji that went through the BBC? Let's take a look. There's gold. 10:10 Eastern. Okay, so 10:10 Eastern would be in the life of this candle. Okay. So as price rallied up to $18.99, could you have triggered it along here? Absolutely. You're above the BBC, you got blue and climbing below you. Yeah, nothing to prevent. Now, what you can do, and what I teach all of our traders, is how to drill down to a smaller time frame to fine-tune the entry and the stop loss. Put a trigger here from 99. The market made $240 per contract available. Okay. Now getting out an exact swing high or an exact swing low is quite challenging. Pretty much you only do that by getting lucky or by accident. So you've got to have something else on your chart that's going to guide you, and again, multiple time frames is the key. Using the 4-tick range strategy, let's take a look. Okay, we'll switch this to 4 ticks. And we'll switch it to gold. At 10:10. Let me get rid of these drawing objects. Let's open it up. There we go. $10:10 Eastern. Well, so there's 10:08, 10:10. Okay, you had a bearish cross, so that's telling you to look for short trades. You get a leg, you get a pullback, touches the BBC, down close. So would it have been a legitimate entry here to be short on the open of this candle? Yes. Open of that candle was 1877 and it dropped down to 1876. So yeah, there was about $100 per contract there. Then price pulled back to the BBC. Price always reverts to the mean. Another short opportunity. Pull back, short, pull back, short, pull back, short. The pullback holds more often than it doesn't. Then buyers take control and we start drawing legs to the upside. See over here, leg, retrace, leg, retrace, leg, retrace, leg, deeper retracement, final leg. Now buyers take control. Leg, retrace, leg, retrace, leg, retrace. Just follow the bouncing ball. That's all we do, folks, is we don't try to outsmart, outfox, outgun, outrun the market, because the market's always right. Our methodology and strategy is designed to put you in sync with the market. The market's dropping. Our methodology will help you find high probability, low risk opportunities on the short side. The market's rallying. Our strategy is going to help you find high probability, low risk opportunities to the upside. That's not how the chart looked when Valerie was trading. Well, all I can tell you is this is a 4-tick range chart. This is the current gold. And this is 10:10. And because these charts are controlled by the Chicago Mercantile Exchange and the data feed that comes through them, not sure how it could have been different. But feel free to ask her tomorrow in the live training room. I'm sure she'll be happy to go over it with you. Okie doke. Okie doke. Now, good word for the day. We're over our time, so we need to get packing. Today we're going to talk about discouragement. We all get discouraged. Ladies, if you're struggling with your trading, you really should consider getting a passport, because we'll be happy to help you learn how to trade. Numbers 1332. So they spread this bad report. Discouragement caused the Israelites to doubt God's promise, give up their dream, and die in the wilderness. Ironically, they were only several days' journey from the promised land. How did it happen? After spending 40 days in Canaan, a land of such fruitfulness that it took 2 men to carry 1 cluster of grapes, 10 out of 12 spies came back saying, "We can't go up against them. They're stronger than we are." So they spread this bad report among the land, among the Israelites. Numbers spread discouragement. Numbers 14:36. The 10 men who incited rebellion against the Lord with their bad report were struck dead with a plague. Only Joshua and Caleb remained alive. So, how about you? When you see others facing negative circumstances, do you express doubt about their ability to succeed? Can you listen to someone's plans without making disheartening remarks? Even if you can't quite envision their dreams, at least agree to stand in faith with them for God's perfect will to be done concerning the proposed endeavor. Think of all the people who have encouraged you during your lifetime. In a world, one kind word from you to someone who's in the throes of desperation, depression, could literally save a life. And the next time that clerk at the store is a little snippy or curt with you, don't be so quick to run off and report her to the manager. Expected to live. She could have a child that ran away from home or struggling in school. You have no idea. She may have got a bad report from the doctor, but she still had to come in and go to work and stand on her feet all day. Now, is that a license for her to be rude and curt? No. But come on, we're all human. We all have our breaking point. Now, I used to be the worst at that. Oh, but in a retail city, because I had worked retail, don't you dare cross me. I'm the customer. I'm always right. You better respect me. That was the old me. Now, the old man tries to creep in from time to time. I'm not a finished work here. There's no perfection. The only thing perfect about me is he who lives in me. And he's trying to clean me up from the inside out. Today, when a clerk gets sideways with me, or anybody out in the world, right? First thing I do, in my head, and I try not to move my lips, is I ask God to give me grace, His grace, because I don't have any. God, give me your grace to understand this situation. And this person, whatever they're struggling with, God bless them, help them, heal them, give them hope. Now, as they're slamming stuff into my bag, and I'm standing there praying that in my head, I've literally supernatural. I'm just saying, I've seen they're without me, cursing them out or anything rude, just praying for them. I've seen with my own eyes a change in their demeanor. They stop slamming stuff in the bag. Pick it up with a little more care. And on a really good day, by the time I walk out the door, there's actually something that resembles a smile on their face. And as I say, have a great day, God loves you, I see just a tiny glimmer of hope in their eye. Wow. To think that you have the power, you have the God-given ability to report them to the manager or put a glimmer of hope in their eye. Who do you want to be? That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.